Thanks for tuning in to this week's news recap. First headline, Microstrategy is first public company to buy Bitcoin. It seems the pandemic and other macro forces are prompting investors to take a closer look at Bitcoin. For the first time, a publicly traded company has bought Bitcoin as part of its investment strategy. Microstrategy announced on Tuesday that it purchased 21,000 Bitcoins at an aggregate of $250 million. MicroStrategy CEO Michael J. Saylor said, quote, "Our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders. This investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment asset with more long-term appreciation potential than holding cash." Meanwhile, the correlation rate between Bitcoin and gold has reached 70% for the first time, which suggests that at least some do agree with Saylor's view of Bitcoin as a dependable store of value. Next headline, the rise and fall of YAM. YAM, a yield farming token launched on Tuesday, generated tons of community enthusiasm and criticism. At one point, it had $500 million locked in it, and then collapsed within a few days. Described as an experiment in fair farming and elasticity, YAM came together in 10 days and combined the features of projects including Compound, Ampleforth, and YFI. Despite being completely unaudited, the YAM token rose from $0 to $138 within 20 hours of launch, leading Shapeshift CEO Eric Voorhees to label it a scam or, at least, quote, fairly transparent pump and dump nonsense. After rising to a market cap of $60 million in 2 days, the YAM team first found a bug that they thought could be fixed if enough votes, 1.6 million YAM, were delegated for a fix to be submitted before the next rebase, which was to happen the following morning. At first, it looks like it would succeed because enough whales had planned to chip in to reach quorum. However, once the votes were submitted, the team figured out that the bug also affected the governance module, so the proposal could not succeed. At that point, the market cap collapsed to zero within 35 minutes, and approximately $750,000 worth of funds was lost. With YAM founders tweeting apologies and replies condemning their irresponsibility, YAM has said in a blog post that it is planning to launch a new version of the protocol. Hopefully the team will heed the words of Lefteris Karapetsis, a central figure from the days of the DAO, who wrote an amazing blog post I urge you all to read that chronicled every step of the YAM fiasco and why this whole thing could have been avoided. As he puts it, quote, "The minimum precaution that should have been taken is write contract tests, have some sort of security audit of the code. If you claim it's an experiment, then treat it as such by putting deposit limits in the code to protect your users, putting an escape hatch in the code to protect your users." All of this is worth a read for his explanation of also why this was a Ponzi game in which, as he puts it, quote, "The first farmers were incentivized to pump and shill YAM via social media so they could find victims onto whom to dump their tokens after the rebase." Next headline, Ethereum transaction fees reach all-time high. Ethereum gas fees reached an all-time high of $6.9 million on Wednesday, beating 2017's previous high of $4.6 million. Bitcoin transaction fees have remained low in comparison, reaching only $1.4 million in total on the same day. The numbers reflect a high demand for Ethereum and a willingness to pay for that high demand, but pose questions about entry points for other layer ones if Ethereum 2.0 continues to roll out slowly. Next line. Coinbase plans to offer loans to crypto investors, plus resigns from the Blockchain Association. Coinbase is branching out from its conservative roots. Starting this fall, the exchange is planning to offer cash loans with 8% interest for Bitcoin-backed loans and credit lines capped at $20,000. Coinbase's sales pitch directly appeals to consumers who don't like paying taxes on what is usually their considerable crypto gains. On Wednesday afternoon, a waitlist opened on Coinbase with the tagline, "Have you ever needed cash for something urgent like a car or home repair? In the past, you might have sold Bitcoin to cover it and incurred a taxable gain or loss. Now you don't have to." Although Coinbase plans to only offer Bitcoin collateralized loans initially, they do have plans to expand into other crypto assets and are pursuing licenses in other states beyond the initial 17 in which they will launch. In other Coinbase news, the company resigned from the cryptocurrency and blockchain advocacy group, the Blockchain Association. In a statement issued by Coinbase, the company said that its decision to resign was based on the association's actions in recent weeks. Industry watchers say that the catalyst was the admittance of rival Binance.us to the association, which is a subsidiary of Binance, the global exchange known for playing fast and loose with regulation. Binance US launched only 11 months ago, but already has around 40 crypto to USD trading pairs, while in contrast, Coinbase, which has a reputation of being more cautious with regulators, has about half of that. Next headline. JP Morgan leading ConsenSys fundraising with $20 million investment. The blog is citing unnamed sources to report that JP Morgan plans to invest $20 million toward Ethereum infrastructure firm ConsenSys, which has been trying for months to raise money. The plan is part of a $50 million convertible debt deal with other investors. As part of the deal, ConsenSys would also take over the maintenance and support of JP Morgan Chase's Quorum assets. ConsenSys has previously been involved in several high-profile enterprise implementations that use Quorum. Next, we have our hacks, attacks, and crimes roundup. Another 51% on Ethereum Classic. Coming 5 days after the August 1st attack, Ethereum Classic suffered yet another assault, which took $1.7 million from the network, adding further scrutiny to the question of whether or not the blockchain possesses the ability to protect itself from meaningful exploits. Next in the roundup, Open publishes postmortem on the ETH put exploit. The Open team released a detailed analysis in response to the exploit. However, the fact of the matter is they cannot turn the protocol off, and so once the exploit was discovered, all they could do was minimize further damage. Next, how North Korean hackers laundered millions from Upbit. This deep dive into the methods used in 2019 that led to $283 million worth of cryptocurrencies being stolen from the South Korean crypto exchange Upbit shows that hackers moved the funds over 10 hops or often created multiple intermediate wallets before sending the funds to an exchange. And at last, in this roundup, the Department of Justice seizes millions in Bitcoin from Al-Qaeda, ISIS, and Hamas. The DOJ says that it seized Bitcoin from 155 addresses allegedly used by Al-Qaeda, having obtained the money through Telegram channels. Al-Qaeda having obtained the money through Telegram channels. Fortune gives the details on how federal agents tricked Hamas into sending Bitcoin straight to the U.S. government. Next headline. Fred Ursum on crypto native insurance. With all the hacks and exploits in DeFi, insurance is on the minds of many in the space. Fred Ursum of Paradigm Capital wrote a comprehensive post about crypto native insurance and the design challenges it poses, including the especially tricky question of whether or not payouts should be manual or programmatic. While entirely programmatic systems do sound ideal, as Ethereum creator Vitalik Buterin pointed out, if an insurance system is programmed to make a payout when X event happens, then token teams presumably would know that they should build into their protocols a way to prevent X from happening. So this kind of leads the insurance to seem moot if it's already accounted for by the token teams. All right, fun bits. Vitalik scraps Ethereum 2.0 to audit supply of Ethereum. For those of you who were following the ETH supply date that Andreas and I discussed earlier, Coin Jazeera weighed in with a story reporting that Vitalik will be abandoning Ethereum 2.0 to find the true supply of Ethereum, And the story asks whether the fact that the supply isn't unknown is due to Ethereum's infamous LSD-themed sex parties. All right, thanks for tuning in. To learn more about Andreas and the ETH supply debate, be sure to check out the links in the show notes. Don't forget, you can now find video recordings of the show on the Unchained YouTube channel. Go to youtube.com/c/Unchained podcast and subscribe today. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Daniel Nuss, and the team at CLK Transcription. Thanks for listening.